Let's have a great week, Warriors. How's everyone doing today? Good day, good morning, good evening. Fed week. Hello, Brock. So I'm thinking about the Fed here, Warriors. Hello, Paul. Your name sounds so familiar to me. Moulton, Paul Moulton. So, blowout jobs number. Sean, how are you? This will give the Fed cover to put rate cuts on hold. I'm not saying I know if they will or if they won't, but they have the cover to do so, except for, of course, our president will not be happy about it if they don't do anything. Hello, Shahab. I'm wondering how the market's going to be able to, how it's going to handle it. I'm pretty sure that if there's a presser that they'll still jawbone and say, yeah, we're there if conditions warrant to continue to ease. But I think it's going to be a pretty interesting Fed meeting because of what happened Friday. So, there's not a unanimous opinion on this easing course that's happening. You do not have my voice. I think everyone else does. So you may want to log out. Oh, you won't be able to hear me. Okay. So,
I will write to him. Don't worry, coach.
okay.
Don't worry.
Thanks, Stephen. While you're here, I have a question for you since you're our candlestick guy and Blake is too. I know you guys know you're like as good as Steve Neeson ever was with candlesticks. So this is a question I posed to you, Steve. Was this weekly candle a hanging man?
Depends. Pin bars. First of all, zoomed out, it looks more like a dragonfly doji. But pin bars, have significance only in combination with other factors.
I see.
Uh,
So this candle is what I'm talking about. Last week's
yeah, I know.
candle,
I know. That's
and
what
it's
I am.
so it's not a hanging man.
It has almost no body, so it's mostly a dragonfly doji.
Okay, so it doesn't have the same implications because it has no
No, and
body.
in general, pin bars are notorious for uh, for their. I mean, they're not conclusive indicators, but they can be important in combination with other factors. So, for example, if you find like a pin bar, like a large pin bar on top of some resistances after a big uptrend or whatever, then a pin bar can add um, confidence to a possible reversal. In this case, interpretation of this doji can go both ways. Somebody can say that this shows indecision, but somebody can also say that look how strong bulls are. I mean, they managed
Yeah,
to close the market unchanged after the first 3 days of the week being as bad as they were, right?
yeah. I look at this candle and how close, and if I didn't know about other things, I would go, God, that was a close to buy. So, one thing I will say that, I can't predict if this is it. One thing that tells me it's not, and, this was sloppy of me, uh, although I was, played this, but then I got run over Friday selling a retracement and see what I mean? That's why that builds a case for me having a bias chart listing where we're at as far as progress on divergences. And we don't have a divergence here.
Yeah, but we will. I mean,
That's
theoretically
what I mean.
speaking,
Okay,
yeah.
we will, but if I would have known it, we will, I wouldn't have shorted it at 31.30 and 31.38. I
Yeah, but
wouldn't have done it.
it was a good call from a risk reward perspective, and
Okay.
you know better than anybody that you can't predict what's going to happen in the markets all times. You just
Yeah. But
choose
this would
something
have
that
told me
makes
to
sense.
wait for a new high. So we'll see. Anyway,
Keep in mind
um,
there is also an alternative interpretation. We might get some horizontal consolidation here, so
yeah.
we might start consolidating between the recent high and the recent low. That is
Well, I'll
also a
tell you
possibility we're
what, we
trying.
take out the recent low, Steve. See how it held this
Oh yeah, we're going
megaphone?
much lower than.
Yeah, it's over. So, I can't say with confidence that we're going to top without making new highs, but I can say with confidence that, and there are a lot of lows that are important from last week. It's kind of a theme, but under last week's low in the S&Ps, there's a problem. Under last week's lows in the dollar, there's a problem, and we already have a problem developing in yen. So last week's lows are important across the board in different types of instruments. So pay attention to that. This is something else I did Friday. I did it a little early. You know, I was waiting for this high to be taken out. Sold some at 920, took half here, but we have a 3 driver here on the crude. The only non-confirmation is here when you get these spikes on a 15-minute. But this is going to be pretty interesting to see if we could get another drive up here. Right now we're holding this, what was a breakout. I thought this was a stop hunt. And then when the market blew, all of a sudden, and we were talking about crude, Steve, during Friday's session, I don't know what the news was, but all of a sudden we had one candle that just exploded and didn't confirm, but I took it as soon as we took out these highs out of half. I still think this is in the topping zones. And Steve, it went right to your number or close enough. Someone was asking you Friday, what would turn you bullish, crude? And I think you said closes back over 60.50. And we almost got to 60. So
We
I think
we touched exactly the channel.
the
You
line.
remember? Yeah, we touched the line to the pip and then pulled
Oh,
back
wow.
somewhat. Yeah.
Okay. All right. So, you know, I mean, it depends on, you know, what you anchor your channel line on, but, you know, I'm
Yeah, I'm gonna show it to you
thinking, okay,
when it's my
yeah.
time. Yeah.
So I should have just had you come on instead of
Yeah.
we could
Who
have
needs
saved some time.
who
Huh?
needs Blake? Who needs Blake, right?
Well, no, I was talking about me, but
Okay.
you know, anyway, because I needed you. I had a bunch of questions to ask you this morning. So, yeah. So anyway, here we are in December, and are you naked? Steve will like this question. Are you naked, or are you clothed? Like I am, by Amanda, and surrounded by content that's going to help you succeed. And it's going to save you time because this would take you about 38 hours a day to update all of this, along with commentary, along with charts. So if you haven't yet, I don't care if there's a promo or not. I think just regular prices are a promo. Okay, so still time to take advantage of what's going to happen in December, or at least I would say take the trial, gives you 10 days, and then you'll know how you want to start off 2020. And it would be great if you decided to start off 2020 with us. Okay, Gregorius. You remind me, you're right. It's like that recording. Just buy the dips. Okay, so we'll see what happens with the dollar here. I mean, euro's pulling back. It hasn't done anything wrong. I guess if you want to stay bearish a dollar, which is okay. I mean, we're threatening a breakdown on the weekly. Right under last week's lows, it's going to open it up to 96 in my view. So we'll see if we could get that dollar weakness. Actually, dollar weakness might help propel the S&Ps a bit and other commodity markets as well if we get that dollar weakness. So I have a great lineup. I hope everyone shows up. Very good lineup this week. A lot of energy people, some currency people, and system traders, discretionary traders. So should be, I think a lot of pearls coming out of our guests this week, enough to string a necklace for June Cleaver. And with that being said, Blake, hope you had a great weekend, buddy. It was raining here for most of it. Did you get our rain? It's our rain because we get it first before you. Hello, Blake.
Blake?
Blake is scalping.
Oh, sorry. I clicked my mute button there on accident.
Oh,
Yeah, it was raining here.
we had deluges.
Can you guys hear me?
Yeah.
Okay. Yeah. So it was raining over here, and and so we got your rain, correct? And it's been kind of gloomy. It's gloomier than normal around here. But speaking of gloomy, how about the FX market? That's gloomy.
Yeah. Partly cloudy, Blake.
It has been partly cloudy. I'm trying to find my.
We will
here.
magnify it. We'll just say partly cloudy and looking for the sun to break out in 2020. What do you think?
Yeah, that is going to be, that's going to be our hope going into this next year, is that we get some sun shining on the FX market, because the FX market has been pretty slow moving. The euro dollar, it's bouncing here a little bit today, and I want to say that Grega called this little wave down here to the 618, and it's bouncing a little bit, but I can't get super excited about the euro just yet. The euro is going to excite me, as we get towards the ECB meeting later on this week, and then the Brexit or the UK vote that happens on Thursday.
And the Fed, what a week.
Yeah, and the Fed, I don't think the Fed's going to be much of a market mover, frankly. But then again, if I believe that if I believe only the Fed's not going to be a market mover, it's probably going to be the market mover. But I don't.
Do you think they're going to move after that jobs number, or stay on hold, bro?
No, they're going to stay on hold. They're waiting. They're waiting out the China-U.S. trade war.
Will President Trump yell at Powell again after this
quite possibly? Yeah, I'm sure he's gonna.
I'm betting yes.
Yeah, he's gonna.
I'll bet you $1.
Rag on him a little bit for not lowering rates, and
to negative. We should go negative rates this meeting.
Well, the fact of the matter is we're doing our own version of QE4 right now and expanding the balance sheet, and I don't know. I'm surprised that
Sorry
Trump
to interrupt.
hasn't really.
Just got some Canadian housing data, nothing really important, more or less as expected. 201,000 versus 205.
Okay, thanks, Steve. Yeah, and speaking of the Canadian, we've got this USMCA agreement, possibly, that's going to get, it's being held up by the Democrats right now, and possibly it's going to be finalized. That we should be watching the dollar Canadian a little bit as a result, but more importantly, probably the peso. And I was actually looking at the peso a little bit earlier, but regarding the Canadian, I'm actually short Canadian dollars right now. I'm long the euro Canadian. It's not a currency that we follow on Forex Analytics, but it's a currency pair that I trade from time to time. It's just not a very common pair, but I picked it up last Thursday as we were trading down here at the 142 level. Post this is wasn't Canadian jobs. This is post BOC rate decision, and the Canadian firmed and the euro Canadian slumped. I picked it up down here, and I am long. I actually want to be long more. I'm just not doing it right now. I think that if we can get past the USMCA passage, I think the Canadian dollar, there's not going to be a whole lot of movement there. I think it might strengthen just a little bit right after an announcement, but I actually want to be long. The euro Canadian, more euro Canadian. I want to sell more Canadian dollars, and as you can see, we're building a nice little base here, and I think above 148, it's going to be pretty darn bullish. But I've got a small position as I've got a decent cost average right now in the pair, and I'm looking for a move above like the 200-day moving average before I get really bullish here. This is something that I'm trading. As far as the euro goes, I still think that the euro has a nice. We're building a nice base here. I was hoping that we'd have a weak U.S. jobs report, but as I told you guys on Friday, we had to be prepared for a strong one, and the euro may slump. It did, and I thought it would come down to 110 and give us an opportunity to be, long down there. But it only dropped to like 110.20 or 30, excuse me, and before bouncing. But I don't want to be super bullish the euro yet. This ECB meeting is going to be a pretty big one because it is Christine Lagarde's very first ECB meeting. So we're going to see how the market's expecting her to be pretty dovish and continuing on with Draghi's rhetoric. Pretty much, no one expects a really big shift in the ECB. However, I think the risk is that there is a shift, and if they start wanting to rely more on fiscal policy versus monetary policy, that can actually continue to boost the euro and firm it up a little bit. So again, I think the ECB meeting is going to be a little bit more important going into this week versus the FOMC. But the highlights of this week are going to be USMCA, the UK elections, which will be Thursday night. I'll be in front of the computer and in the chat room Thursday night for the election, and then for the China-US trade. The tariffs to be in place. Everybody believes that the tariffs are going to be postponed. They're going to be put on hold as the U.S. and China finalizes a trade deal. But will they? And if they're not, what happens to the FX market as a result, and what happens to the equities market? That's going to be the kicker going into this weekend. And remember, the tariffs are implemented on Sunday, the 15th, which will be right here. We should have a decent indication of where the White House and the administration is leaning, I think, ahead of the weekend. But we are at risk of gaps going into next week. So it's going to be kind of tricky, as we are dealing with the tariffs going into the weekend. But like I said, the big events for me this week are really the ECB meeting and the UK elections. So look at the cable. The cable is still right up against pretty key resistance here. The important polls, the YouGov polls, I believe are coming out tomorrow. That's going to be like the last major poll that the market's really looking at. There's some minor polls that came out over the weekend. And it shows that Boris Johnson still has a fairly significant lead and nothing's really changed. So that's keeping the pound elevated. I'm hoping that we get some sort of dip ahead of the election night down to like the 130.50 level is what I'm hoping for. I'd like to pick some up before the election down there, just a small position. Then, I'll either exit with a loss if we get like a hung parliament, or, he loses outright, or obviously if there's a majority win, then I'd be looking to pick up more sterling on a breakout if we broke above 132. So what I'm hoping for this week, again, is just a little dip in the cable or in the sterling. I don't know if we're going to get it. I'm just hoping, that's all I can do when I'm not in a position. Just hope that the market comes in the direction that I'm thinking it will. And that's pretty much it. That's what I'm looking for this week. It's going to be a pretty busy week, guys. It's going to be just a week that we're going to have, both eyes open, both ears, to the ground, and pay attention to all the, headlines that are coming across. And I hope it is a high volatility week this week. I really hope it it is for all of our sakes. Now, this is after this week, things are going to get a little bit more quiet as we head into the end of the year. But that's just keep that in mind. One of the things I was talking just about regarding the U.S. dollar Mexican peso. Here we are at the 200-day moving average, basically. If the USMCA gets passed, I think the dollar Mexican peso might dip a little further, but if it dips down to 1910, I think that's the place that I'm going to be looking to pick some up, because the market's already expecting a USMCA deal and they're expecting it to be passed. So once it's formally done, we might see a little bit of peso strength, but I'm going to use that as an opportunity to be buying somewhere down the 1910 level if I can get it. I've already got some bids out there. We'll see if we can spike down there towards my bids. But that's what I'm kind of just keeping an eye on regarding the peso right now and currently. So yeah, I mean, with that being said, Steve said he doesn't need me, so he's going to take over.
I was kidding, of course.
Oh yeah. Oh, now you're kidding. So what's going on, Steve? How are you doing?
I'm good, mate. I'm good. This triangle, by the way, dates back to January 2017. Imagine what's going to happen when it breaks out, huh?
Yeah, I think the dollar Mexican peso. I've been trying to trade this currency pair for. I mean, I've been trying to trade it to the long side. I've never been on the short side, but I've been on the long side, both down at support, and I've been long near resistance as I thought we were going to break out. Earlier this year, this summer, I was long up here around the 20 levels. I thought we were going to really surge higher. And the safest thing that I found is just buying dips if you really think it's going higher. I actually am bullish the U.S. dollar Mexican peso. We're just looking at the commitment of traders report here on Bloomberg. Let me see if I can pull this over for you. I don't know where it's at. Here's the COT report for the peso, and what you're gonna notice is speculators are very long pesos. Remember, this is like the best carry trade in the market right now.
Indeed,
it is, and so if these long contracts on a very illiquid currency start to unwind a little bit, that's when you're going to see this type of move. And I'm going to exaggerate a little bit here, but it's going to be this type of move in the pair, and that's why I'm more apt to pick it up on a dip. But as you guys know, the carry cost to be long the U.S. dollar Mexican peso is quite high. So I don't want to, you got to be timed pretty good in there. You can't just like buy the dollar max and sit in it for a long time. And if you guys want to play it a different way, what you can do is sell the futures. You can sell like peso futures, and that's probably the way to trade it without incurring all the carry costs right now for those of you that have futures accounts. So that's kind of what I'm thinking. That's kind of what I'm thinking with the peso. What else you got going on, Steve? What are you looking at today, and how do you feel about the euro down where it's at, and post jobs reports on Friday? That was a pretty strong jobs report, by the way.
It was strong. It was much stronger than the market was expecting. Although we have to consider that 48,000 of those people were just the GM workers coming back from the strike, right? So even taking that into account, it was rather strong. But something, Blake, I don't pay so much attention to every single month's job number, and the reason is the following. First of all, we know that last year's jobs were revised down by 500,000. So we know that the initial number can end up being way off what it really is. And second of all, even even a single week or a single strong month doesn't change the fact that we have seen that the trend in the jobs creations have already started since like 1.5 years ago, slowing down. Now, of course, um, no need to go in the conversation. I've had many times here that we don't count anymore jobs the way the government used to count them. For example, a lot of people mention that we have like a 50-year low unemployment, when 50 years ago the unemployment was measured in a totally different way in the US. But irrespective of that, yeah, unemployment remains quite low, despite, which is a worldwide phenomenon, job quality not being what it used to be.
Yeah.
The euro, though,
That's
held quite nicely. I mean, doesn't seem like it's willing to break down, right?
Yeah, it did. It actually held up quite nice, and I think a lot of people were probably, a little nervous as it was just holding up there, as right after the jobs report, and it took its sweet time just to pull back a good 20-30 pips, and as you can see today, it's already bounced back. So I think that, and I do agree with you as far as job quality. I think the higher paying jobs are not as uh, 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 prevalent, or not prevalent's not the word I'm looking for, not as good as we've seen in the past. And I think that's something that the Fed should be taking into consideration a little bit more. But
That is the reason, the way that they have changed how they measure statistics in almost everything is also the reason why people initially couldn't understand why the Fed kept moving the bar, having to do with full employment. If you remember, at the beginning of the recovery, they had initially set like a target of what, like 5.5%. That when unemployment goes down to 5.5, 6%, something like that, they would consider to start hiking. And then they started claiming that the job market is still not that tight. To be honest, it's one of the few times that they were actually honest, because indeed, what is today 3.5% would be roughly 10% back in 50 years ago. And that's not speculation. We know exactly what has changed in the methodology since then. And mostly it's the following things. First of all, people that are unemployed more than 1 year do not count anymore in the U3. The official unemployment that we get is called the U3. So they don't count anymore in U3. If you have lost your job more than a year ago, you're not counted in that unemployment number anymore. And there are a lot of people that belong in that category. And second of all, it used to be, and in my opinion correctly, that the official unemployment number did not count as employed people that had a part-time job, but were saying that I actually want a full-time job. I just have a part-time job because this is all I can find. Now, not only we do count those people as employed, but even worse, if there is a person that has 2 or 3 part-time jobs, those count as separate jobs. So a
yeah,
person that has 3 part-time jobs actually adds 3 employed people to the U3 rate, which makes no sense, right?
yeah, it doesn't. So yeah, it's interesting. An interesting job market that we have going on. So well, Steve, I'm going to pass over to you. And it looks like we did take down our special offer.
Yes.
Finally,
Yes.
I was a little stunned when I saw the cyber offer was still there. And guys, if the sound quality for this week's week ahead webinar webinar was off, I don't think I had my microphone adjusted correctly, so sorry about that. And I was out and about. I couldn't come back and record it because of some family commitments that I had. So but anyway, if you guys haven't tried out Forex Analytics, make sure you do so. It's just try it out, $1 for 10 days, as Dale mentioned a little bit earlier. And then also make sure you visit our webinar sponsors, Forest Park FX, especially if you're looking for a brokerage firm that's better suited for the way you trade. They're the best people to talk to, in my opinion. And they could have you be
And
part of their
another
reimbursement
bad
program too.
Canadian data, by the way, just came
Okay.
up.
Yeah, it looks like it's a little little worse
No,
than
no.
expected.
Look at the building
Ooh,
permits.
wow, the building permits were down quite a bit. Well, that's
Yeah.
good. It's helping my Euro Canadian a little bit, not a whole lot, but I'm telling you that Euro Canadian, I'm very bullish the euro, because I think that the carry trade is going to blow out of the water going into this next year. So, and I think that the euro is going to rally quite significantly as a result. I actually want to be short Canadian dollars, and I think that the market was very wrong-footed after the Bank of Canada rate decision on Thursday. So, anyway, I think that the euro Canadian's on its way. Much higher than 148, but I'm really looking at 147.50, 148 before it breaks out.
The
Anyway,
Canadian jobs data on Friday were horrific. I don't
they
remember
were.
when was the last time that I've seen such a huge outlier. I mean, I don't remember when there was the last time that I've seen like a developed economy have a jump in unemployment by 0.4% in a month, and that with participation rate going down. So participation rate actually didn't act as a headwind. Actually, it acted as a tailwind. But still, I mean, that was a horrific number. I mean, nobody expected that. It was like a Four Sigma event or something.
Yeah, it is crazy. All right, Steve, I'm going to pass it over to you. You guys have a great day. Let's hope for some more volatility later on this week. And thank you all for tuning in today.
Thank you, Blake.
Thanks, Steve.
See you,
Thanks,
Blake.
Dale.
So, Steve, if you've been out of a job for over a year,
You don't
does it
count anymore in the U3. U3, by the
do
way,
they?
if I remember right, the government has like 5, 6, 7 unemployment different rates that they measure, but the one they announce as the official one is the one we call U3. So over the time, the last time I think they toyed around with this, as they keep toying around with statistics, was under the Clinton administration at the beginning of the 90s. So they've kept toying around with it, throwing people that were counted as unemployed from the U3 in other categories, which they do not announce as the official one.
Okay. So, yeah, and if you've been out of a job for a year, you're in the "you're screwed" category.
You're in the
You
category
don't count anymore.
you don't count anymore as unemployed.
You're
Yes.
like, okay.
Yeah. Not in the U3 that they announce officially as the official
Okay.
unemployment rate. That is why I'm trying to explain to people.
Yeah.
There are people that just watch the news and they're like, "Oh my God, look at this, Trump! 50-year low unemployment." And I'm like, "Nope, unemployment is far, far, far higher than it was 50 years ago." And this is not like a conspiracy theory. I mean, what I'm telling you about the way the measures, you can go ahead
Yeah,
and Google it. All
I
that is
believe
official
you.
stuff. Yeah, I mean, it's not like some kind of a theory that has no proof or whatever. We know that they in every single category, governments
Change the accounting rules.
exactly. They keep changing the accounting rules to window dress things as much as possible.
Yeah. Those bastards.
You know how it is. If you don't want to take the hard way, which is making the correct political decisions, which is going to have definitely a cost in the short term, and you'd rather let somebody else in the future take a lot more cost. That's what you keep doing, and that's what they keep doing. And that's why one of the things they toy mostly with is inflation as well, because inflation is a tax nobody has to vote for, right? Inflation is a stealth tax that nobody has to vote for.
As are tariffs.
No, that's totally different, because tariffs are actually a direct tax that is being paid by people. And this is one of the things Trump has been lying outright, saying that Chinese are paying the tariffs. No, Chinese are not paying the tariffs. Chinese people are paying the tariffs that China imposes to US products, and US citizens are paying for the tariffs that US imposes to Chinese products. That's exactly how it works.
Yep. All right, buddy. So what's on your radar for this week? What do you think after?
First of all,
I know you. Go ahead.
Since you mentioned it, we can start by showing what I told you. Look at this. I mean, this was the channel, and we perfectly
Yeah.
tagged that on Friday and pulled back
Nice
from there.
line.
So the whole outlook here hasn't really changed in any way. I mean, we've spent from the 1st of October, and now we're like at the 10th of December. So we've spent like almost 2.5 months
Yeah.
slowly drifting higher within this channel. So there is nothing impulsive with what we're seeing here.
Maybe
So
they're going to try and hold it together until the
IPO
deal.
Yeah.
When is that? Wednesday?
I think so.
It's this week.
I think it's Wednesday. Yes.
Okay, buddy.
So I wouldn't find it unlikely to see crude immediately after the IPO just letting go and and just plummet lower. I wouldn't be surprised at all. So I still view this move as corrective, and regardless, looking at the bigger picture, what is the bigger picture here? We have a triangle, right? We have this resistance trend line here. We have this support trend line there. So, I can't really turn bullish as long as this trend line resistance is holding. And we're not even there yet. I mean, we can't even break through this ascending channel. So I still think that the risk reward, especially now that we've gotten even closer to this trend line resistance, still favors short positions for another revisit of this trend line 51, 50 and a half, 51 and a half, roughly there. So I still think this looks like a decent opportunity. And if that is the case, if indeed crude breaks lower, that might also help the Canadian take out eventually 133.50 to the upside and get this. I mean, I do the weekend analysis. I can't even remember in how many pairs this week I had to more or less write roughly the same type of same type of analysis, saying that we're trapped in the range, between X and Y, and until we break above, X or below Y, there is not much to do here but be patient and wait, because this is the markets we're currently having to, to deal with, right? I mean, we were looking at 2.5 months of price action in crude. Now look at more than, I mean, USD CAD since the end of June has been trapped within this channel, which is almost horizontal. I mean, it's slightly ascending, but insignificantly. Look at USD NOK. USD NOK, I mean, is consolidating here horizontally. Look at the Aussie, trapped within this descending channel, but having found support in 66.90 and being unable to go above 69.30. I mean, so many of the Kiwi is one of the few exceptions. If you remember, we were talking about this inverted head and shoulders formation, one of the few exceptions that has actually made the move. But the vast majority, I mean, with the exception of the Kiwi, with the exception of the pound, with the exception of the euro pound, just because it has pound in it, everything else is more or less consolidating. Even, the DXY itself, here it is, the DXY itself consolidating within this range, which is within this slightly ascending channel. I mean, we have to face some of the worst markets we've seen because there are no trends, and when there are no trends, there are a lot of fake moves, and that is the most dangerous things. That's why I was writing today in the chat room that I've abstained from trying to take many positions. I still have half of my short euro pound, which I had also put on as a pattern in play. And I have to play defensively, you know what I mean? Because this is one type of a market that if you try to commit yourself too much, you're going to find yourself wrong-footed, because the market has no rhythm. It has no volume. It has no rhythm. It's like frozen in time. Now, I do think that this is one of those occasions that it's, as they say, it's the darkest just before dawn, right? So that's what I think the situation is here. I mean, we're getting the worst type of markets we can have, having to do with being a trader, but we're not far away from getting the exact opposite thing. Now, worst case scenario, in my opinion, they're going to try to. Now, I don't know if they're going to succeed. Worst case scenario is they manage to succeed to postpone the inevitable for another year until the US elections. That's what they're trying to do. Now, will they succeed? As I've said many times, I think they'll also need a lot of luck to succeed. So I wouldn't be surprised at all if it blows up in their face before they manage to make it to the November elections. But one way or another, I do think that we've already reached the bottom in market conditions and volatility, and the VIX itself is a testament to that. We've been repeating again and again that this long-term divergence now in the VIX is very indicative that something is brewing in these markets, and they are holding them as much as they can. They're holding the short-term rates. They're holding the repo market by throwing tens of billions every day frequently. They've resumed quantitative easing at a larger pace than they have done in the past. They've undone several months of quantitative tightening within like a couple of months of quantitative easing. So we know that we're very, very close to the end game, right? We need to be a little bit patient, and in order for you to thrive when the conditions are going to be proper again, you have to play defensively. You have to be nimble now that the conditions are what they are. So try to constrain yourself with doing the minimum only in what looks to be very clean and to be moving. And I think that if you hold enough capital, you're going to be heftily rewarded once we get the markets moving again, because then I think we will be able to again profit from some like very big moves. I remember, because before becoming friends with Blake and partners and everything else, I used to be a listener to his daily webinar. So I remember there was the time that, for example, I remember Blake had made more than 1,000 pips in one of the Euro crosses, like I think it was Euro Kiwi or Euro Aussie. Now, even dreaming of making 1,000 pips in like a few days in something looks like sounds like crazy talk, right? But trust me, we're going to get those markets back again, because no matter how much they manipulate them, as I've said before, at the end of the day, it's like trying to ignore gravity. At some point, gravity is going to take hold of you, and that's it. And the same thing is going to happen here. The BIS report this morning that the repo crisis is structural due to the four main banks holding more treasuries instead of cash is a big concern of the horizon. No question about it. They're trying to downplay the importance of what's happening in the repo market, but what's happening in the repo market is very, very, very indicative of the huge underlying problems to the economy. And that's not only about the US economy, right? I mean, globally, the situation is horrific. I mean, we've had the worst. I mean, Trump says we have the best economy ever. We've had the worst economy ever, not only in the US, in general. And as I said, there is so much window dressing you can do. There is so much accounting gimmicks you can use. But at some point, reality is what it is. And you can try to kick the can down the road, and often you will succeed to doing it more than people initially expect. But you can't avoid the inevitable. It's going to happen. Coach, you're unmuted, by the way.
Oh, you hear me breathing, huh?
Yeah. Which if it was
comforting. All right. To know that I still exist. All right.
Something tells me you'll exist for many, many more years to come. I have confidence in you. We have a friend here asking for, oh my God, CAN PLN. Do you mean CAD PLN? Because what is CAN? Probably you meant CAD
Oh,
PLN.
the
Right?
Zlotny.
Yeah, but yeah, Zlotny against the. Oh my God! I mean, that's one of the weirdest requests I've ever had. But I can tell you one thing for sure. Just watch this trend line here, and that trend line there. So you have yourself a beautiful triangle. So break out from this, and I think you'll have yourself a move worth trading. Okay. Now, having to do with
That's a pierogi triangle.
What is a pierogi triangle?
Pierogi's a food that Polish people make. It's kind of
Oh,
like a
okay. Sorry, I didn't know
potato
that.
pancake.
You see,
Yeah.
you learn something every single day.
Yes. We get
So gold, nice rejection from the area we were talking about. I would like to see one more low in gold. I would really like to. I think it's going to get people even more bearish. 1433. I would like to be a buyer here. Silver looks even worse. But keep in mind it is approaching this trend line. Just below we have the 61.8. We have also the 200 daily moving average approaching to this 1630 area. So I think that the time to be buying silver is not far away either. Gold silver ratio, as it usually happens in this case, I mean, when we have metals underperforming, the gold silver ratio is thriving. So we've seen a healthy rebound here in the gold silver ratio. But I do think that it is very likely that we're going to see at least one more push to the downside in the gold silver ratio. Now, the question is from where? I was looking at this potential formation. We seem to be breaking above it. Alternatively, we might want to be looking at this channel. Just a thought here. So we might have a little bit more of upside. Of the only metal that is just unstoppable is palladium. I mean, just look at this. We've had now, what is this? 2, 4, 6, 8, 10, 12 consecutive up days. 15 out of the last 16 days in palladium have been up days. I mean, unstoppable. But keep in mind that we are approaching, we're slowly approaching, actually not that slowly, we are approaching this cup and handle formations target, which is at 1940 roughly. And I do think that once we do complete that formation, we might finally see some decent corrective move to the downside. Until then, obviously it's too strong to try to fade. It is what it is. Now, the most interesting of the metals, though, and the most interesting move in the metals last week came from copper. Because if you remember, I was looking at this descending wedge here in copper, the one marked in red. And once we broke above it, we started consolidating in what looked to me like another corrective formation, which was this purple triangle, right? And on Friday, we had this blowout move to the upside, actually closing also above this horizontal support resistance area. So it's quite clear to me that the copper market has really shifted. And I think that opens again the potential for another move towards 285, which would also point to a possible overperformance, although, the correlation has not been that strong. A lot of correlations that used to be strong haven't been that strong during the past few months, some of them during the past few years. But that would also point that perhaps the Kiwi is going to, continue towards our objective, which is up here at 66, 65, and perhaps that even the Aussie will eventually manage to break above this descending channel, which dates back to late October 2018. So it's been more than a year now, right? So this is one of the reasons I'm paying close attention to what copper does. And copper did make a bullish move on Friday. Actually, you can see that was a really long candle. I mean, we hadn't seen such a long candle in quite some time. So I think you shouldn't be ignoring that development. Now, having to do with the rest, the mainstream rest, as I was saying, this move looked 100% corrected to me. I see really no big resistance until we come close to 133. So I find no reason why the cable is not going to make it there. And having to do with the euro, it remains very tamed. The market is expecting 100% to see what they can be expecting from Lagarde, because in essence, as central bankers, is a complete unknown, right? I mean, we know a lot about her as the head of the IMF, as a minister of finance in France, but it's her first press conference as head of the ECB. So the market is definitely staying here, trapped within this descending wedge. I know that the vast majority of the people expect her to be very dovish. So I think that if there is any surprise, there is a more likely scenario that the surprise is going to be bullish for the euro than bearish. I think the market is already pricing in a high possibility that she's going to sound very dovish. So if she just sounds dovish, the market might not do anything, might even start, moving higher. And as I've said plenty of times, I think that if we get a break above 111.80, the market might start squeezing in the same manner that the pound did some time ago. So we might see some kind of a fractal behavior from the euro playing catch up with what the pound has been doing. And that might also end up signifying, since we were talking about it, a low in the euro pound. Euro pound has completed my first target by reaching the quality of this first leg lower at 84.80. It is now trying to find support at the 84-cent area, previous support resistance area, and below that there is also an interesting support area at 83 cents. So I don't know if we're going to rebound from 84 cents. I'm still holding half of my position because there is still a chance that we might even make it to the 83-cent area. But perhaps the ECB and Lagarde's first press conference is also going to put an end, at least a short, medium-term end, to this move lower in the euro pound, right? So I wouldn't be surprised to see something like this playing out, and at the same time, the euro making this move. Okay. Now, I'm not advocating that you should be long here, but I'm saying don't be short above 111.80. I mean, I can't make it more clear than that. I believe that above 111.80, the chances that we're going to squeeze and we're not even going to turn back for a pullback to buy, the chances are quite significant. That's what I think. At the same time, if that happens, I think we're going to finally see a breakdown from this 94.80 support area in the USD Swiss. So 94.80 is extremely significant as support. And if all that happens, we should also see the USD Swiss breaching through that area. And if that happens, I also think that the USD Swiss is going to move significantly following that breakdown, at least for a period of time. So it's all about being patient and seeing what the market is going to bring us. But the good thing about it is that we have some levels that we know are important. We know that they've been important for quite some time. And the fact that they've been important for quite some time makes them reliable levels, because we know that a lot of limit orders, stop losses, etc., have been accumulating there. Okay. Could you please evaluate USD INR? Yes, I would gladly do that. Thank you, Forex Gal, for your comments. So USD INR, and I'm going to throw in a bonus besides USD INR. So USD INR, last time we had a look at it, I was expecting an eventual move higher, perhaps from lower levels, and that ended up being the move, because it was obvious that this was some kind of a corrective move, right? So this was the move. And now we're seeing, after this breakout, we're seeing a consolidation. So I wouldn't be surprised if this gets resolved to the upside once again. But I'm going to throw in a bonus here with the Nifty and the Bank Nifty, because this is a likely scenario here in my mind, okay, since you're asking about it, but we remain in this triangle. So currently, from current levels, I wouldn't be doing anything with it, because you see Paul Volcker just died, actually. Okay. Okay, he was quite old, actually. He had a good life.
Actually, I know it's, I liked the guy.
Yeah, he was.
Because I was a bear in the early 80s, and, when he was tightening. But it's, what he was known as, the liquidator. And now he's liquidated.
Anyway, probably Paul Volcker was the last
real Fed chairman.
A real Fed chairman. Yes.
Yeah.
Yes.
End of an era. Yeah.
Yeah. And then an end of an era with him dying today. Yes.
Yeah. So you know what, guys? Money comes and goes. Time is gone forever. Make it count. So, and you know what? When it's all said and done, it's not going to be your greatest trades that you remember. It's going to be the people that you laughed and cried with. So, our relationships are our gold. Okay. In my extremely accurate and humble life coach opinion. Do what I do, not do what I say, not what I do. Deal? All right.
So for our friend that was asking about the USD INR, I told him I'm going to throw in a bonus here. The bonus here is the
bonus.
The bonus is the Nifty.
Blue light special on the Nifty.
Blue light special, because look at the Nifty. It formed an ascending wedge. It looked like it was breaking lower. Then it faked everybody out by posting an incremental new high. And now it's in danger of breaking down here. And look at Bank Nifty. It did the exact same thing, broke to new highs, and seems to be failing from here. So I would be very, very careful with both of those indices, because there is a very good chance that now they have trapped very weak bulls at the worst possible place in the market, and we might see some big move to the downside following this. So that was the bonus I wanted to throw in.
Is Alina here? Alina Lim. Paging Alina Lim, your limo is waiting for you. I'm holding up a sign. I'm at the airport, ready to take you, swoosh you to a face interview. If you're here, please raise your hand.
Yeah, there's a button to raise your hand, or you can type in the chat box if you come in with another name or whatever.
Okay. It looks like the interview is not happening.
Okay. Anyhow, I think we did cover quite a lot of stuff, and
you have a view on uranium?
No, I have no view on uranium.
Okay.
I don't even. But is it actually a tradable?
Yeah. There's some people buying like uranium mines and stuff. Think
I see
nuclear energy.
an
Yeah.
uranium energy corporation. So
Yeah.
obviously that must be tightly correlated. Let's have a look at it out of curiosity. So
Because I'm kind of, I had radiation 5 years ago.
you
So
did,
I pay it.
you did, but for a good reason. But for a
Huh?
good reason. But for a good reason.
It's who knows if it was, who knows? It wasn't so successful. Anyway, I'm glowing today and it made me think about uranium.
Definitely a lot lower as many commodities since the high that we had. Yeah, a lot
Huge
lower.
bases developing there.
I wouldn't.
No?
I mean, just look at this. It's trading like at less than
It's heavy.
$1, right?
Yeah.
It is
So
very
they're like
heavy.
penny stock. Anyway, the analogy I heard once was the universe of gold shares, just the flow of a garden hose would blow it up. Okay. And the uranium space is so small, just using a straw and blowing a little bit of water, just any money flow into this would make it blow up.
Yeah.
Anyway, okay.
Might be the
So
case.
good review, like usual, bro.
Okay, thank you.
Any opinion?
Coach?
I know how your opinions are also facts.
Coach, I don't know if it was me lagging or you lagging,
Oh, okay.
but
I
I
don't
lost.
either.
I lost you for a few seconds. Can anybody in
Oh,
the chat help? Did you also hear day lag, or was it me?
am I lagging?
It was him. Yeah, you
Oh.
were lagging, Coach. Okay, it's okay.
Oh,
No-
I'm a
okay.
laggard. Short me. Go ahead. Try it. I dare you. Many have tried. Many have died. So
Okay,
anyway,
so rest in peace, Paul Volcker, and I wish
yeah.
you, Coach, to have at least as many years as he did. He lived.
What did he get to?
92. Not bad, eh?
Oh my God. Yeah, that's a long candle.
Not
Can't
bad.
ask for,
Not bad.
can't
I
ask
mean,
for much.
I would sign for that any given day. If they told me
Yeah.
92 or let it be whatever it is, I would say give me 92.
Well, you know what? I need to renegotiate, because when I was going through cancer, Steve, I was talking to a rabbi who was a healer, and he said, Dale, why don't you make a contract with God and say you'll help poor people, homeless people, if he'll just give you 10 more good years. Okay. So I did that. And now I'm halfway through it, and I want to renegotiate my contract with God.
Yeah, extend it this time.
Yeah,
I mean, make it 15.
extension. I mean,
make
look,
it 15 this time.
Yeah, I mean, look, you give Brazil extensions, Venezuela, why not me? So anyway,
Keep
everyone
keep doing what central bankers are doing. Keep kicking the can down the road.
Okay, anyway, and I'm going to stay liquid. And so besides that, guys, have a great day. See you in the chat room. I think we'll have some action for Turnaround Tuesday. So see y'all tomorrow. And remember, don't just count your pips, count your blessings. And if you have a shot or an opportunity to do so, be one to another. And I'll see everyone tomorrow. Steve, thanks again.
Thank you, Coach. Bye-bye.
I hope our whole team starts feeling better. We have the blue flu here, so
yeah, even my wife actually is.
Everyone take care of themselves, and I guarantee you, win, lose, or draw, we're gonna wrap up the year strong. So I'll see everyone tomorrow. You too, Steve.
Bye-bye, Coach.
Adios.